Hi, my name is Shirley Lou. I'm your host today for Focus in Finance. And you know what? I'm so excited today because guess what? I bring a lot of different guests on the show, but today I have a very, very special guest. And this guest is no other than my brother, John Weisenberg. Hi, John.
Hey, sis. Thank you for inviting me today.
It's funny, right? Now, audience, TV out there, remember, this is my older brother, okay? Because when he meets you, he's going to tell you that he's the younger, but absolutely not. He's definitely the older side. But, as older brother, sometimes, brother kind of know a little bit, but they tend to have a little ego on them. But you know what? I one day I convinced my brother to say, hey, look, let's join forces with me and go into the financial education where we could educate the world. And lo and behold, John, why don't you tell a little bit about yourself? And it took me a while to convince my brother that this was the right move to be an educator on finance, because he was already in the industry itself. So it was kind of tough for a little sis to convince a big brother. Go ahead.
Well, my background is investment banking and lending. I've been in the financial banking investment side for about 43 years. And prior to that, the first 15, 20 years of my life, I did the thing. The Citicorp, Bank of America, Merrill Lynch, Edward Jones, Charles Schwab, all that. And I know that Shirley was in the business educating people on their financial stuff, where I was on the other side of the fence. And a lot of our product, I realized through the years, as my clients were working, and of course they eventually end up talking to Shirley, showing them the different products and different approach on things. So that's more on the retail side. And what I found out is that a lot of the stuff here is really captive. And the captives, they don't want the American people or you guys to know the real secret of finance. And Shirley Lou here, I've watched her podcast and everything. She has a lot of amazing products and benefits that actually really, really helps you guys. And it took me 11 years. I finally gave up my that side of the lending license and financial investment license to work with my sister.
Yeah.
And it definitely the product and stuff is. We'll talk about that later.
Yeah. Well, that's great. But John, as you're going out there, it's amazing how he's able to connect with people out there, being able to talk, the kind of things. So when you meet, I'll give you an example. I know recently you met a retirement home folks. What did you say to them that you're helping them with that changes the game? Maybe just take one example for right now, how you help someone that's 60 years old, that they're about to retire, and that what do they do with their money next? What do you recommend? What are you advising them out there?
I was at a retirement home a few months ago. I had several. I remember this one case where I had like 45 retired senior that already retired or going to retire. And the funny thing was there was speakers already there from Merrill Lynch, Edward Jones, Charles Schwab. They came and did their I was kind of like the last person that week to come out to talk. And I'm sure at that time everyone was kind of like heard the same thing. But what they didn't hear and what you guys have to understand is this. The closer you are to retirement, the more likely you end up losing money. And if you're already at retirement, you're going to lose money. And one of the things I did was I listened to everybody's story. I listened to the people who made the presentation. What they don't tell you is this. You need to know what to do with your money. You need to know what you have. And the most important thing when I do is I educate people to show them that instead of waiting 5 years, 10 years, or 30 years, or maybe next month, my thing is to find out what their problem, what their needs are right now and then, and anticipate problems now and not wait till then. A lot of these advisors don't do that, and they're captive. And one thing is if you're going to work with someone, make sure that you do your homework and compare the different benefits and features. Now, also another thing, one doesn't fit all. Everyone's different. The unique thing about Shirley Lou and myself is that we tailor this to people. But the most important thing is we anticipate what your problem is now and later, so you don't worry about that. And we can also do planning to show people exactly what to expect.
Okay. What I'd like to do, I want to elaborate a little bit of when my brother says the word, you're losing money when you retire. Okay, so here's what's happening, okay? So let's say you have $200,000 in a 401k. And one day it's going to be a decision time where you have two decisions. You may say, I'd like to take money out of my 401k to start living off. Let's assuming you're going to take money out of a 401k, start living off. When he say lose money, meaning you're doing a withdrawal. If you're doing a withdrawal from your 401k, it will start depleting your money. So I want to make sure that's what we mean by that. In addition to that, you've got the other side is the stock market could be losing money. So if you have a 401k and your intention is to do a withdrawal, you need to rethink that. You need to think about having something what's called lifetime guarantee income, so that you could have that distribution without ever your money being gone. Now, granted, you could eventually take more money than what you have. Let's say you gave $200,000 under the lifetime income, you ended up taking $400,000 out. Now that's the promise of guarantee where you don't have to pay back, right? But here's the other problem too, when he said you're losing money is, even if you didn't want to take the money, you get a rule, it's called RMD, Required Minimum Distribution. So John, why don't you explain to him about what RMD means to all the elder?
Well, here's the thing too. I'm going to cap on what she's saying about the
RMD.
RMD is when you get a certain age, whether it's 50, 60 years old, you have to start...
73.
You're 73. You have to start taking your money out. If you don't, you get taxed on it. But I'm going to cap on what she was saying about the RMD and the everything she said. I want to put things in perspective. You have to understand right now, no one knows what the future or what the economy is doing right now. We have this stuff with food prices, gas prices, and I guess the recent bombing in Iran, just things in general. And I'm not here to talk about politics or anything, but what I can tell you this. Fear where you are now, so what you have right now is really may not work. And if it does work, give Shirley or us an opportunity to talk to you about that, because the stuff that we present to you is going to help you. So fear more where you are right now as opposed to finding what the future can hold out for you. So as far as the RMD is concerned, when you get to that point, you need to make a withdrawal in your account. The beauty of this is that with our withdrawal, it's lifetime income. There's no loss in the stock market if the market was to drop. Gains only. And there's one feature that no one else has to offer, and I think we have an edge on that. How about if you take your money when you're at your RMD and you become ill? If you become ill, your retirement can double. That covers long-term care, short-term, long-term provision for 5 years. And Shirley can talk about that.
Yeah, what he's talking about is there's a lot of unique feature in the retirement program today that I think you owe it to yourself to explore. Which is something, this is a very short time where we have on television to be able to share with you all the detail. But I think it's important to understand that RMD, requirement minimum distribution, is a very, very important situation that you all need to consider. And how about this? Let's say if we can take one step further. What I mean that one step further is that what if that money that he mentioned earlier, when you're taking it out, is taxable? If I can help you structure it to become tax-free, convert it to a Roth. Now, that's probably the next episode where we're going to talk a little bit about, actually maybe we could talk about now, talk a little bit about the Roth conversion, how I can take my 401k and convert it to a tax-free strategy. Let's say if I didn't need the money to at least 5-6 years down the road, where my $200,000 grew to be $300,000, but the $300,000 is all tax-free on the Roth conversion. John?
Right. Now, as far as I'll let Shirley elaborate on that Roth conversion, but I do want to add one thing, and that is a lot of you out there are different about your retirement. Some people like to get their retirement and just, that's my retirement. But most importantly, diversification is very important, even if you retire. What I'm saying to you is whatever you have in your nest egg, whether it's qualified, non-qualified, do a 70-30. Take 70% in one account, 30% in another, using our product. And depending on what your age are, let's say you're 75. 75, basically add 10 to it, that's 85. Take 85% of your money and use these products to leverage it. And then if you want to take the difference, you can use that to take risk in the market if you want. But I assure you, whatever it is, diversify. It could be 50-50, could be 60-80, 80-20, whatever it is that you need. Now, as far as the Roth conversion is concerned, it's very easy. You need to contact us. We just take your money that you have right now, we can convert it over, and then we turn around, utilize our product and investment strategies to put you on a different plan. There's different ones, and I'll let Shirley talk to you about that. It could be IULs, could be annuities.
Okay, yeah. So let's talk a little bit about the Roth conversion. The Roth conversion here, I'm mainly focusing on 401k, TSP, 403b, 457. So let's say someone has $400,000 and they're planning to take that money out for retirement, right? And right now, if you take it out for retirement, it's taxable, correct? And imagine, let's say 5 years from now, you say, you know what, I don't need to touch the money to about 5 years from now. We can do what's called Roth conversion, and how you do that's very simple. If I have $400,000, you can convert slowly, partial every year. 400,000, let me take 100,000 today, convert that into a Roth. Now, how it becomes tax-free is that the IRS will make you pay taxes on the 100,000 today. You understand? You will be taxed the 100,000 today. Once you convert it to a Roth, that $100,000, if it grew to be 200,000, is growing tax deferred, compounded interest. And when you take it out, whether it's a withdrawal or whether it's guaranteed as lifetime income, it is 100% tax free because you already paid the IRS the money up front. But remember, Roth conversion only the clock start ticking the minute I move that into a Roth today. That means you can't get that tax-free until 5 years. Let me repeat so that you don't yell at me, she told me to do Roth conversion. 3 years later, you took out the money and it's taxable. Again, the clock start ticking the minute you convert it. So I convert 100,000 first year. Next year, I'll convert another 100,000, which means that clock start ticking the next year. You understand? So that's how Roth conversion works. And let me tell you, it is an amazing, amazing things that one of the greatest vehicle out there that people don't think about, But John, so how do they get in touch with you?
My name is John Weisenberg. You can look up my website, camhelpyou.com, CAMHELPYOU.com. And my personal phone number, office number is 240-462-8296. Again, it's 240-462-8296. I'd love you to give me a call.
Yeah. So, like everything else, you're going to get really excited in the next episode because I'm going to talk to you about using life insurance, one of the most critical assets when it comes to retirement. Again, thank you for tuning in. And remember, we rise by uplifting other. And you can always reach me out, Shirley Lou, at 703-608-1203. If not, you can Google my name and you'll find me everywhere. Thank you.
Thank you.
Thank you, John.
Thank you, Stress.